332X6779. Firstly, I will present a part of the introduction in this assignment, which is to diversification by investing the 5 stocks from a different industry. Within the equity market with the 500,000 ringgit Malaysia, which are the YTL Corporate Berhad, Badan Berhad, Taskor Berhad, UEM Sunrise Berhad, and Hadirada Berhad. Then, we will perform the interview in the balance of our portfolio and decide the replacing body performance stock and introducing the additional asset class, which is the FCDO on the 4th May 2024. During the second rebalance, we will answer our diversification strategy by adding a new international stock mutual fund as our additional asset class and to actual the potential growth opportunity. Then I will continue to present a part of the economic analysis. First is the GDP. The figures show that the GDP Malaysia from 2019 to 2023. We can see that the lowest GDP is in 2020 because of the COVID-19 and the highest GDP is from 2022 because of the recovery of COVID-19 and the implementation taken by the government. When we compare to the global GDP, we can see that the GDP of Malaysia is not performed well as it only has 365 USD billion in the 2029 and the global GDP was 87 GDP triple in the same year. The one is the unemployment rate. We can see that the figures show that Malaysia tried to maintain the unemployment rate below 4% except in the year 2020 4.5% and the 2021 4.6%. It is because of the COVID-19 pandemic, and when we compare to the global unemployment rate, Malaysia is lower than the global in 2020. It's due to the effect of the government Malaysia that extended 3 months WPS to help who affected economy disturbed by the COVID-19. Next is the inflation rate. We can see that the inflation rate increased from negative 1.14% from 2020 to 3.38% in 2022. It is because of the economic recovery from the COVID-19 pandemic. However, the decrease rate in 2020 is due to the COVID-19 and the decrease in 2023 is due to the monetary policy. When we compare to the global, we can see that both Malaysia and the global economy show the higher inflation rate in the 2021 and 2022. But the overall of the inflation rate of Malaysia is lower than the global. The last one is the import and export. The lower value of both import and export is in 2020 due to the COVID-19, and the highest value of both import and export is in year 2022 because of the recovery of COVID-19 pandemic. When Malaysia compared to global, Malaysia trade recovery has been relatively stronger compared to the global trade.
My name is Ong Shui Ting, matrix number 2X693. I will present about industry analysis. First, the construction industry in Malaysia is becoming more progressive, modernized and efficient. This transformation provides substantial opportunity for companies like YTL Corporation Berhad to take on large-scale infrastructure projects. However, there are challenges due to competition from international firms. YTL Corporation has a market capitalization of 42.04 billion ringgit. The industry GDP contribute growth from 53.43 billion ringgit to 56.66 billion ringgit in 2023 with a projected growth rate of 5.8% annually from 2025 to 2027. Next, for financial services industry, the financial services industry in Malaysia is rapidly digitalizing, enhancing operation efficiency and customer experience. Major players like Maybank dominate the market with market capitalization of 120.5 billion ringgit. The industry GDP contributes slightly decreased from 4.6% to 4.5% in 2023, but the GDP value increased to 82.37 billion ringgit in 2023. Fintech innovation is a significant driver for future growth in financial services industry. Next, the logistics and transportation industry is set for significant growth due to economic recovery and the expansion of the e-commerce sector. Taskor Berhad benefit from strategic collaboration with e-commerce platform, enhancing supply chain efficiency. The industry contribute 3.5% of GDP in 2022 with a value of 62.2 billion ringgit and is projected to rise to 87.57 billion ringgit by 2027. Well, for the real estate industry in Malaysia is recovering, supported by government investment. UEM Sunrise Berhad with a market cap of 5.6 billion ringgit is highly competitive. The industry contribute 24.37 billion ringgit to the GDP in 2023. The healthcare industry in Malaysia is growing for both public and private firms. It contributes 78.2 billion ringgit to the GDP in 2021, which 42.1% is contributed from the private sector and the remaining is from public sector. Harta Lega Holding Berhad is a leading company with a market cap of 11.3 billion ringgit in this industry. The industry has potential for growth through collaboration like CHEA 2024, enhancing its export opportunity. Next, for derivative market, Malaysia derivative market, especially the crude palm oil futures FCPO, has grown significantly due to the global connectivity through the CEM Globex platform. The market has been increased liquidity and participation with projected average growth of 5% annually. The volume is expected to reach 23 million contracts by 2026. Well, for international investment, the packaged food industry has been significant growth and reached 2,730 billion US dollar of market size. Beta firm with a market cap of 1.89 billion US dollar hold a significant position in this market. This industry is expected will grow driven by consumer preference changes and advancement in packaging technology. That's all for my part. Thank you.
Thank you. Next, I'll be presenting for fundamental analysis. My name is Chang, mention number 284863. So one of our stock of our portfolio is actually YTL Corporation Berhad. The reason why we choose YTL Corporation Berhad is due to its potential in growing bigger is in net profit margin. This could directly contribute to its earnings per share and also market to book ratio. So as you can see, its working capital ratio and quick ratio has continuously increased from 2019 until 2023, and it has achieved a greater than 1 of market to book ratio in 2020. So actually, this could make the portfolio even more valuable. Next, we also choose Malayan Banking Berhad as one of our stock in our portfolio, as the reason why we choose it is because it has compound earnings per share of 9.5% every year, which contributes to its high share price and market value to be a bright profile to hold in our portfolio. So as you can see in the graph, actually for Malayan Banking Berhad, it has always at least achieved 80% of its book value and able to achieve over than 100% of its book value. And its working capital ratio and quick ratio is always greater than 1 from 2019 until 2023. Next, we also pick UEM Sunrise as one of our stock in our portfolio. The reason why we choose it is because it has very diversified development and investment grade project in Malaysia and overseas, and expecting to have exceptional land bank with potential value. Besides, we also choose Harta Lega Holdings Berhad as one of our stock in our initial portfolio. The reason of why we choose Harta Lega Holdings Berhad is due to its achievement of 2.4 billion throughout the years of 2019 until 2023, which indicates its strong resilience in overcoming the challenges in the market. And we also expect a very high return from Harta Lega Holdings Berhad in upcoming years, as the price to earning ratio has indicated that this share price was relatively low compared to its earnings, which is undervalued in the market. Yeah, so that's all for me. I'll pass to my teammate to present for next time.
Good day, Toto. My name is Yap Zixing and my mention number is 285516. Now I will present why we selected SCPO derivative as one of our portfolio stocks. The first reason that we selected this SCPO derivative is because the nature of derivative itself. Investors usually will using the derivative to manage the risk and managing the price fluctuations in the markets. And then the second reason that we selected SCPO is because Taiwan itself is considered as a global super community, and our country market is one of the world's largest producers and exporters of the palm oil. Hence, this particular attract us looking to gain access to these emerging markets. And the last reason is since SCPO are the most actually trades future contract on the Bursa Malaysia derivative markets. It also means that they have the high trading volume in these markets. This provides us the liquidity and then for sure it will easier make us enter and exit these positions. Present our first rebalance portfolio. Bank was taken out of our portfolio. The reason behind is because it has the limited goal as a blue chip stock. And then meanwhile, Tesco Berhad company is taken into the portfolio is because in 2023, it has the high market to book ratio performance rate. And then at the same time, we expected to have the strong growth in 2024 since it's recovering in external trade activity and is increasing warehouse capacity. The reason why we choose YTML as one of our stocks is because it shows the significant improvement in profitability in recent years. Hence, it makes us have a potential to invest on it. And besides that, the drop in price for earning and market to books value suggests that the stock may now be more reasonable value, and which present that is a buying opportunity for us. Besides that, the extremely high price per earning ratio in 2020 and 2022 indicates that the stock was overvalued. Hence, we are expecting it will have a high growth in the future.
Good day, Doctor. I'm Lim Kaijun. My matrix number is 2856811. Based on the initial portfolio, there are 5 stocks traded by us, which are YTL Corporation, Malayan Banking Berhad, Tesco Berhad, UEM Sunrise Berhad, and Harta Lega Holding Berhad. The historical price consists of 1 year data from 30th of December 2022 to 29th of December 2023 obtained from Yahoo Finance. Based on the graph, all the stock exhibited an upward trends display a minor movement. In order to keep our portfolio well diversified, we have made the decision to recognize it added other class of asset in our first rebalance, which is future crude palm oil. As the graph shows, all the stocks have the moderate gains in share price. In the second rebalance, we have not changed our commitments to the same stock inside of Malayan Banking's Berhad and future crude palm oil's FCPO. We moved them to Tesco Berhad and the Vita Farms. Because of the latter of poor performance, we are using foreign stock Vita Farms to keep the diversified of our portfolio. The historical price is based on the information that Yahoo Finance provided. According to the graph, despite variation, all the stocks saw a little upward trends through the course of the time. For the return tracking in the initial portfolio, from the table show that only Tesco Berhad and KLCI have the negative annual expected return at negative 0.1678 and negative 0.0285, where other stocks which are YTL Corporation Berhad have the highest annual expected return of 1.22, followed by UEM Sunrise Berhad 1.2 and Harta Lega Holding Berhad 0.4777 and Malayan Banking Berhad 0.0223. Therefore, the high expected return could bring an outstanding profit to our portfolio. However, the investment always include risk as measurable by standard deviation for each stock. Based on the table, we can observe that the UEM Sunrise Berhad has the highest standard deviation with 0.5742, followed by Harta Lega Holding Berhad 0.5063, YTL Corporation Berhad 0.411x, Tesco Berhad 0.2013, Malaya Banking Berhad 0.0895, and KLCI 0.0743. The high standard deviation can be considered as high risk investment. Hence, we should invest in different stocks with different level of risk to achieve a balance between generating highest return and managing risk on our portfolio. From the cumulative return graph, has been shown that all the stocks have a positive return and the stock benchmark line is above KLCI benchmark line, exclude Tesco Berhad. From the table of return tracking in first rebalance, we have changed the Tesco Berhad to future crude palm oil FCPO. We can see that YTL Corporation have the highest annual expected return of 1.6753, followed by UEM Sunrise Berhad 0.8077, FCPO 0.3677, Malayan Banking Berhad 0.2994, KLCI 0.2726, and Harta Lega Holding Berhad 0.2301. During this period, all the stock has and the Malaysia index have a well performance. Based on the table, YTL Corporation Berhad has the highest standard deviation of 10.5577 followed by FCPO 0.9365, UEM Sunrise Berhad 0.4984, Harta Lega Holding Berhad 0.3205, Maya Banking Berhad 0.0961, and the lowest is KLCI 0.0772. The data show us that the highest expected return of stock always consists of high risk such as YTL Corporation Berhad. Based on the graph, has been highlighted that YTL Corporation Berhad has the highest return during the period. From the second rebalance, we can observe that Beta Farms exhibited the highest annual expected return of 1.7370 followed by Harta Lega Holding Berhad 1.3758, UEM Sunrise Berhad 1.0498, Tasco Berhad 0.9101, YTL Corporation Berhad 0.8268, and the lowest is LCI with 0.003. Our portfolio has improved as the expected return increased during this period. Based on the table, Harta Lega Holding Berhad has the highest standard deviation of 0.6529 followed by UEM Sunrise Berhad 0.6003, Tasco Berhad 0.5667, Beta Farms 0.5572, YTL Corporation Berhad 0.5396, and the least risk is KLCI with 0.062. This indicated that the high standard deviation means the high variety of the price movement. Based on the cumulative graph has shown all the stock benchmark returns line is over KLCI return benchmark line.
Good day, doctor. My name is CHONG, mention number 284459. Now I will talk about the capital asset pricing model, CAPM, and allocation. For our initial portfolio, UEM Sunrise has the largest value of beta, that is 1.91, and followed by the YTL Corporation Berhad 1.14 and Harta Lega Holding Berhad 1.11. The higher the beta, the higher the risk of volatile of the stock price movement. The stock with low beta, which are Malaysian Banking Berhad 0.9669 and Tasco Berhad 0.36. Even those stocks are high risk, but their CAPM analysts exhibit that their expected return are negative value. For example, the expected return for UEM Sunrise is negative 8.41%. YTL Corporation Berhad is negative 3.76%, and Harta Lega Holding Berhad is negative 3.54%. This indicates that there are some internal or external factor impact on their company performance. Furthermore, Tasco Berhad has the positive value of CAPM 0.97 and it is reasonably with low risk, low return. The table below is the allocation of and performance of the initial portfolio. This is developed based on our efficient frontier to form an optimal portfolio with standard deviation 0.96, 0.93% and mean return 34.27%. Then we obtain the best allocation capital for each stock weightage, which are YTL Corporation Berhad 20.09%, Malaysian Banking Berhad 30%, Tasco Berhad 30%, UEM Sunrise 6.39%, and Harta Lega Holding Berhad 13.51%. Our portfolio Sharpe ratio is 33.38, indicate that our portfolio would be extraordinary performance with high return relative to risk. Next, the first rebalance on our portfolio shows that the beta of YTL Corporation is considered as high risk, and as the beta is greater than 1, while its CAPM shows that the highest expected market return 75.6 among the 5 stock invested. Furthermore, the FCPO has the lowest beta, which is 0.0911, implying that it has very low volatility compared to the market. The low beta means low risk, resulted to the low CAPM 5.39%, indicate that the expected return for FCPO is very low. For the first rebalance, we replace the Tasco Berhad to FCPO to develop an efficient frontier due to its low performance and get an optimal standard deviation 1.27% and the portfolio will return 62.45%. With this level of standard deviation and portfolio mean return, we got the optimal allocation for our capital for each stock weightage, which are YTL Corporation Berhad 19.09%, Malaysian Banking Berhad 30%, UEM Sunrise Berhad 15.64%, Harta Lega Holding Berhad 30%, and SBO 5.26%. Our portfolio Sharpe ratio is 45.83, indicate that our portfolio is high return relative to the amount of investment risk taken. Based on the CAPM and beta analysis of the second rebalance of our portfolio, UEM Sunrise and Tasco Berhad exhibit high beta value of 1.5647 and 1.5392 respectively. This high beta value indicates significant volatility and risk in their stock movement, resulting in negative CAPM value of negative 1.74544 and negative 1.6738%. Harta Lega Holding Berhad with a moderate beta of 0.9849 has a CAPM of negative 0.9313%. Furthermore, retail farms showing a negative beta of negative 0.6766 indicate an inverse relationship with the market and a positive CAPM of 5.34 to 2%. This stock had diversification and hedging against market downturn due to its relative high expected return. Conversely, YTL Corporation, despite its high beta of 1.4986, yield a negative CAPM of negative 1.5165%, suggesting that the expected return does not compensate for the risk. Hence, the secondary balance of our portfolio indicate a diverse mix of high beta, low beta, and negative beta stock, each catering the different investor risk profile. For the secondary balance, we have changed the lowest performance stock FCPO to an international stock retail farms. Due to some fundamental and technical analysis, we changed Malayan Banking Berhad to Tasco Berhad. We got the new efficient frontier for our secondary balance portfolio and get a best standard deviation 1.4% and portfolio mean return 104.91%. The risk-free rate is 3.2% and remain the same in each stage. Therefore, we are able to allocate our capital efficiently for each stock weightage, which are YTL Berhad, YTL Corporation 28.14%, Tasco Berhad 28%, UEM Sunrise Berhad 24.76%, Harta Lega Holding Berhad 8.32%, and retail funds 10.78%. The efficient frontier has brought us a higher Sharpe ratio, 72.85 than previous rebalance, indicate that our portfolio is getting high return compared to risk taken. For the profit and loss part, we have started to execute our stock trading with 400,000 and the rest of 100,000 remain as balance. We create our portfolio by investing capital based on the allocation we discussed at the previous slide. At the day of 3rd May, we summarized that our portfolio total return has gained 93,037. The major contribution of the return is YTL Corporation Berhad that bring us 53,300 profit. Unfortunately, FCPO has the lowest performance, which get profit of 1,200. Therefore, we would change the lowest performance stock FCPO to an international stock, which is retail farms, to improve our portfolio performance. Additionally, based on the technical and fundamental analysis, Malayan Banking Berhad had the low performance in the secondary balance, and we took initiative to change the stock to Tasco Berhad to improve our portfolio performance. For the secondary balance on June 24, our portfolio has achieved a total return of 35,000. To finalize our portfolio performance, our total portfolio return has 628,000, included with the initial capital of $500. On the day of 24 June, our final portfolio return is about 25.62%. Although the return is not too high, but we are appreciative with the stable gain from our portfolio. Next is benchmark. The figure on left-hand side shows that the CAPM and actual return for the first rebalance. From the figure, we can see that the comparison between CAPM and actual return among these 5 stocks, all the stocks have evaluated as overvalued except FCPO, as we can see that their actual return are less than their CAPM. The excess return for Malayan Banking Berhad and UEM Sunrise is quite high. Therefore, we can conclude that our overall first rebalance portfolio has underperformed relatively to its CAPM benchmark. For the second rebalance, the figure on the right-hand side displays CAPM and actual return for our second rebalance on our portfolio. When comparing to actual return to CAPM expected return, all the stock in our portfolio is undervalued since their excess return is positive value. The other value meaning that our stock price is currently lower than its intrinsic value, where it does not reflect to their actual return. Therefore, we can conclude that the undervalued stock can improve our portfolio performance as it has the potential to outperform in the market. That's all for me. Thank you.
Every financial advisor will advise to not put all the egg in one basket by investing in one industry. Our portfolio consists of various industries as they are affected by different factors. In our initial portfolio, we have selected 5 different industries, which are construction, financial service, logistics and transportation, real estate and healthcare industry. Moreover, we have changed some low performance stock in each stage to improve our portfolio performance and ensure the potential gains. In the first rebalance and on our portfolio, we decide to replace the stock from logistics and transportation industry to derivative. In the second rebalance stage, there are 2 stock from different industry has been replaced by other stock which are financial service to logistics and transportation and the derivative to the food industry. Our portfolio consists of various industries as they are affected by different factors. In our initial portfolio, there are asset weightage allocation in the stock which are Harta Lega Holding Berhad 13.52%, UEM Sunray Berhad 6.39%, Tasco Berhad 30%, Naya Banking Berhad 30% and YTL Corporation Berhad 20.1%. Moreover, we have changed some low performance stock in each stage to improve our portfolio performance and to ensure the potential gain. In the first rebalance on our portfolio, we have decided to replace the stock Tasco Berhad with SCPO. This is due to the performance of Tasco Berhad is quite poor and low contribution to our portfolio. Therefore, we have decided to change it and attempt to benefit from derivative sector. The asset weightage in first rebalance is 5.26% in future crude palm oil, 13% in Harta Lega Holding Berhad, 15.64% in UEM Sunrise Berhad, 30% in Naya Banking Berhad, and 19.1% in YTL Corporation. However, there are 2 stock has been replaced by our other stock which are Naya Banking Berhad to Tasco Berhad and FCPO to International Beta Farm in second rebalance stage. When the changes of the stock happen without the different asset weights allocation. The asset weight allocation for the second rebalance is 10.78% in Vita Farm, 8.31% in Harta Lega Holding Berhad, 24.76% in UEM Sunrise Berhad, 28% in Tasco Berhad and 28.14% in YTL Corporation Berhad. Thank you. That's all for me.
In conclusion, we made the decision to replace the underperforming Tasco Berhad with the international stock Vita Fund during the second rebalancing on the 4 May 2024 and generate a positive return of 47.63% by 31 May 2024. The final rebalancing of the portfolio on an special day showing an overall net profit of 698,096.09 ringgit Malaysia, reached a 25.62% return, showing the positive performance of the portfolio. When we compare to the KLCI benchmark, the portfolio performance saw an average return of 25.62%, which surpassed the benchmark average return.